Welcome to Profile Traders. This is Reza and you're listening to our market analysis for February the 19th on a Thursday. So what you are witnessing is absolutely not unusual, which is a very dead, quiet market going into a option expiration week. And the parameters that I gave you within the last recap hasn't really changed. The main area of support, it's down there at 2070 with a minor area of support which would be below 2085. So if we do break below 2085, 2084, we should then go target 2070 and above 2099. The only sustainable target that I see, if we get a successful break to the upside, it is going to be the touch of that main resistance line up there, anywhere between 2145 to 2150. So from here, two things gonna happen. One, after this option expiration, low volume shim and scam is over with, market fails to bring in demand above 2100 and we drop hard. We pretty much erase all this tight range, low volume action. Or once 21 starts to break, we will see it. It's gonna go ballistic, massive short covering, new buying, whatever it is. We will see a price expansion off of 2100. Then there is really nothing prior to reaching that level up there. So once this option expiration is over with, we are going to know pretty much straightforward what they have within their plans. Mini bracket 2100 to 2085, below that 2070, above that must be seen how we break it. As far as crude, my analysis from the last time also remains, which is, I told you, once we do reach and we do hit this level of the main trend line, market is going to increase in volatility. And it happened that exactly what you're seeing in volatility happened. Look at the volume candle down there. Let me refresh the data just to make sure it's, well, yes, now you have two. So it's a very, very, very neurotic trading that is going on within a range of 55 to a low of 48. So truly, in the big picture, if you want to avoid being chewed up by this nastiness, be patient until price gets close to 48 to buy, and be patient for price to get close to 54 to sell. Because as long as it's in the middle of this trading range, the backs and the forth are quite violent. And if you do not know what you are doing, it is absolutely the perfect market to rip you apart. The dynamic that we are seeing right now, it's obviously a lot of the late money that for whom the downtrend has become so obvious, and they are hearing it all over the news. Crude crash, crude crash, crude crash. So all of a sudden at these lows, they are sellers, because like everything else in a late stage of any kind of a move, the late money always suddenly becomes intelligent and find that they discover something new and they get into the business of it. So now the late money is shorting and is shorting, but as they are shorting, they are encountering 3 or 4 forces that are going against them. One, many traders are ahead of them and they are short from levels of 100, 80, 90, 70, and they are using these levels to gradually take profit off the table, and their buying creates demand. Number 2, you have the fact that a very nasty storm of cold weather is hitting a very large part of the United States, obviously generating more than normal demand for heating oil and all sorts of oil related products. Number 3, you had a refinery that exploded yesterday in California, and then you had another major train transporting oil that derailed. So you had 2 major catastrophic events, but most importantly the refinery that is going to be out of business for a bunch now. That will create shortage of refinery oil coming out. Then you have the element of Middle East that is again back into play. ISIS is spreading like cockroaches everywhere. You have countries after countries collapsing. Us abandoning and leaving embassies, Libya, Yemen, 2 countries in a matter of 2 months. We abandoned our embassies. Now Jordan, Egypt, others are involved, and they are now bombing all the refineries that ISIS was using to sell their oil up to hundreds of thousands of barrels a day on the market. That will no longer be. And these cheap prices are creating excess demand by consumers by using it more because it's cheaper. So you take all these things and put them together, it's becoming rougher and rougher and rougher and rougher for the shorts who are selling this price to get result out of it. But the interaction of long-term sellers covering, maybe some long-term buyer coming in, and the idiots in between shorting randomly at places that are not strategically wise, it creates this very nasty back and forth. So can we conclude anything from what happened today? Absolutely not. All I can say is that we just created a much wider trading bracket, because now with what we have today, obviously today's high is the main bracket high, and the bracket low that I had at 49.25, 49 and a half, I will leave it down there. So this is the big range. Within that bigger range, we have a support coming in at 51.25. If we do break that, it's very possible that we are going to go towards 50.50 and then 49 and a half, which is extremely important support. And in order to go to 54, obviously we need to reject out of this current rotation and exit above 55, 52.75 to be able to go attempt for a 54. As for gold, I have absolutely nothing bearish to say about gold. All these weaknesses that we see on paper, it's pure BS, garbage. People like you, people like me sitting here on our behinds, we don't even have touched an ounce of gold in our lives, but however we click the button and we become gold seller. And millions and zillions of others do that, then it brings the price of a perfectly good commodity down. Was it because of supply and demand? Absolutely not. Just because of a stupidity of gambling. But the mere fact is that the physical gold is in high demand and it is being accumulated like you have no idea how much by countries like China, especially that is building all the framework to make their currency the lead currency of the world in the future and be a challenge for the dollar. And as the main basic for the foundation of their currency, they are building the largest reserve of gold ever. So every time that this gold comes down on paper, I laugh to myself because I know it's a bunch of bastards probably sitting somewhere in Europe, Zurich or somewhere, manipulating price down in order to go and grab as much as physical as they can cheap. So, but meanwhile you and I trading it, we have to deal with it. Support is still remaining at 1200 to 1197, which you saw how beautifully it held during the last time that I gave you this support. Now, same thing, this must hold, and in order to go back to challenge 1225, now resistance is at 1214. Therefore, bracketed market between 1214 to 1200. We buy as close as possible to 1200 after there are signs of level holding, and for this to exit on the upside, it needs to break above 1214. So that's it for today. If you wish to learn more about reading markets with market profile and trading it, check our website. All my 5 courses and 1-year membership to my trading room is now available for $550. Not a bad deal. Have a wonderful evening. Talk to you later.